What's up, future professional traders? It's Angels FX with you, and I'm really happy because finally I created my mentorship videos. Many people DM me, texted me, please create mentorship videos about your strategy, about forex trading, and overall like the basics of trading. So finally, after the 1 month, I was creating my videos for 1 month because I wanted to give you like highest quality as possible in simple way. Okay, so first of all, welcome to 828 Club. You are premium member for lifetime, and I'm really happy because we will share a long journey, successful, important journey. Okay, we will smash profits and we will print money. Easy. So today I'm going to explain basics of trading, forex, and market structure. Importance of market structure. So let's start. So, what about Forex market? Forex is the most liquid market in the world with a daily trading volume of $6.6 trillion daily. Imagine $6.6 trillion daily. The volume is so high. So that's why it's so many. See, foreign exchange refers to the buying and selling of currencies in correspondence to another. It is the most traded market in the world. So the Forex market is the most traded market in the world. So what does it mean? In Forex market, it's the highest volume. 70% of the volume and transactions happen in 7 major currencies. Euro USD, USD GPI, GBP USD, AUD USD, NSD USD, USD CAD, and USD CHF. The primary factor to move any market is the orders of supply and demand. An increase in supply causes price to rise, and while a decrease in demand causes the price to fall. Smart money concepts. You will see as SMC. So SMC means smart money concepts. Smart money is the money invested by institutions, hedge funds, banks, and etc. So big money. Smart money traders can move the price. That's why they have a big power in the market, and many call them market makers. So they are refined also as market makers. They trade with big volume that we retail traders can't even imagine. Why we can why we cannot move the market? Because we do not trade as much as volume as institutions do. So what does it mean? We are not entering in the market, so we are not opening positions like as they are opening. We are opening, for example, 2 lots, 5 lots, 10 lots. They are opening thousands of lots. So it costs like 1 billion to move by 1 pip. Imagine. So we cannot move the market. That's why you should not trade against this smart money. Instead, you should follow them. So follow the flow of the market. Banks are the smart money traders with the highest volume. The volume banks invest in the forex market usually make up more than 60% of total volume of the market. Imagine. They have in-depth information, knowledge, and a professional team that helps them persistently profit from their trades. Smart money has a huge amount of capital to trade with, so they have a lot of money. Because of their large orders, their actions cannot be unseen. So what does it mean? When they have orders and when they open positions, you are able to see, you are able to follow them, you are able to see this, how can I say, blueprints, okay? So they cannot hide their positions and their moves. So that's why it's important to know market structure. So what is market structure? Market structure is an important for the traders because you can understand how the market moves. So we know that market moves only in 3 ways: bearish, bullish, and sideways. So bearish is downtrend, bullish is uptrend, and sideways is ranging, like consolidation. So price is not moving up and price is not moving down. It's moving range. So this is only 3 moves that market has. After having a great understanding of the market structure, you can read and analyze charts without indicators. So you would able to trade naked forex. So you are only looking at charts and price action. You don't need any indicators, EMA, or any other bullshit, okay? On RSI. It helps you to identify the price action and liquidity. So when you know the market structure, you can identify blueprints of the big money, smart money, and also know where is liquidity, where is smart money traps, and etc. We will learn about this, of course. So let's start with bullish uptrend. How to identify uptrend and bullish move. So as you can see here, we have this simple move. So price goes up. As you can see, it's uptrend, like bullish. So in uptrend, we have series of higher low and higher highs. Okay. So first of all, we have low, and boom, we have higher high. Then we have higher low. Why this one is higher low? Because this low is higher than this previous low. I will repeat. This is called higher low because this low is higher than this low. Sorry, this is higher than this low, okay? After we break this higher high, so this higher high is higher than this higher, okay? I will repeat. We have higher low. From this point, we went up and we printed this swing point. So this swing point is higher than this. So what we are calling this? Higher high. Okay. Boom. We have another swing point. This is called higher low because this is higher low. So this low is higher at this low, this previous low. Boom. Again, we have higher high, swing point printed. So this higher is higher than this. We are calling this higher high, and etc. Like you know. This one is called complex move. So what does it mean? We have these swing points. Okay, so you can see I marked for you guys swing points. So this move is called impulse. When we are like in uptrend, so in bullish move, and we are printing higher highs, this move is called impulse. This is impulsive move. What does it mean? Like the correction, it is this move. Like imagine this box, and this is called correction. We have swing point here. So imagine this box right here, okay? I will show in the charts also in a couple of seconds. So imagine this box, sorry. We have lowest point here, okay? In this range, lowest point. So this is our higher low. This is not our higher low. This is just internal structure. This is internal structure. So this is correction. This is correction. Many people are saying that this is break of structure or change of character, and they will lose trades. They will open positions here and boom, they will lose because they don't know how to read market structure. Okay. Again, after this low, we printed higher high. So this is impulsive move. Again, we have correction, impulse. Okay, so in this range, like from these three swing points, imagine it's box. See, lowest point is higher low. Okay, so this is not higher low, this is not higher low, this one is higher low. Why? Because from this point we broke this structure, so we printed new higher high. So this one is called correction. Boom, impulsive. Again, correction, impulsive move. Okay, let's talk about bearish downtrend. Simple, like the bearish downtrend move is series of lower low and lower highs. So we have this high, then we have lower low. We have lower high because this swing point is lower than this high. Okay, so this point is lower than this. So we are calling this lower high. So imagine this line, we have highs, we have lows. So this is lower high, this is lower low. Okay, this one is called lower low. Why? Because it's lower than this point. Look, it's up there, it's down there. So this is lower low because it's lower than the previous swing point. Again, we have lower high because this high is higher than this, and this low, this point is lower than this. So this one is called lower high. Lower low, lower high. So this is series of lower lows and lower highs. Look, when we have downtrend bearish move, this moves is called impulse when we are printing lower lows. Okay, in bullish we are printing higher highs with impulse. In bearish we printing lower lows with impulse. Impulse, again we have correction and lower high is printed because this one is lower high and this is not. Why? Because this is highest point in this range. So this is lower low. Again we have impulse, boom 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 boom, correction. So imagine this box. Where is the highest point? in this range. Where is the highest point? Here, correct. So this one is called lower high because this point is lower than this low. So this is lower high. And this is highest point in this structure. Okay, so this one is called lower high, and not this, not this, not this, not this. This is fake, 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 okay? Boom, impulsive move. What is sideways, like consolidation move? When market doesn't know if it should move upside or downside, so uptrend or downtrend, or bearish or bullish. So we have series of equal highs. So these swing points are equal in equal zone, okay? So this is called equal highs. These lows, low swing points, are called equal lows because they are in equal zone, equal lows. This is form of liquidity. We will talk more about this. So what is breakout structure? A breakout structure is simply the process of forming a higher high and higher low on a uptrend, or a lower low and lower high on a downtrend. As a trader, it is important to be able to identify the breakout structure, as it can signal a shift in the market sentiment and provide trading opportunities. So look at this chart. We have bullish move, as you know, in previous slides. So we have series of higher highs and higher lows, higher highs and higher lows. When we break previous higher high with the impulsive move, this break is called breakout structure. Why? Because we broke the structure. We printed new higher high, newer, okay? Again, we had this correction move, higher low, and impulsive move. This impulsive move printed new higher high. What does it mean? We have breakout structure here. Like, you can mark this as pause, and it means breakout structure, continuation of the trend. What is change of character? CHOCH. A change of character, abbreviated as CHOCH, essentially signifies the initial shift in order flow within a financial market, or shift in the order flow, okay? So what happened? We had this bullish move, as you can see. So price was moving bullish, but boom, after this impulse, we had bearish move. What does it mean? When we are changing from bullish or bearish, this move is called change of character, okay? Look, change of character, CHOCH, shift in order flow. This point is change of character. Why? Because if we print it like, why this one is not like, for example, change of character? Because this higher low was not broken. The previous higher low is broken, and we printed lower low. So we did not print higher low, like, so this lower was broken. What does it mean? We have shift in the market. We have change of the trend. We have change of character. Okay, look, sorry. We had this higher high, and we know in a bullish move we have series of higher highs and higher lows. So if it would continue like move of higher low, we would print it higher low here and then boom. But no, we printed lower low. That's the point of change of character. So let's go straight to the charts and see examples. So here, what this move is. Correct. This is sideways move. Correction. Why? Because we have this kind of moves. Boom, 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 boom. Okay. We have this equal lows. Sorry, this is equal lows. Let's mark equal lows and equal highs. Okay. Equal lows and equal highs. And we know that price, we can see that price was bearish from here. Like, ignore this move. So we are in bearish market, bearish. So price is moving downtrend, in downtrend. And after this low was printed, let's mark this low here. Price gave us series of higher highs and higher lows. So where is our change of character? Our change of character is here. Why? Because this is our, let's say, this is our what? Correct. This is our lower high. This is our lower low, lower high. We know that when we have bearish move, so series of lower highs and lower lows, price should move just like this. If we had this move, then this would be our lower high. But no, price gave us change in market. So my price was moving bearish and price moved to bullish. Okay, so price from here, from this point, is moving bullish. What does it mean? We have change of character here. Okay, I hope you understand. And after this move, so this is our impulsive move, we have our correction. So we have this correction and we print it low. So this is higher low. We have this impulse, boom, again correction, we have higher low. Why this one is our higher low? Because in this range, let's mark, in this range, where is our lowest point? Here, okay? See, this is our lowest point. And this is why this is higher low. So let's mark with this range. So this is our range. This is our next range, like from this to this. So let's delete this. We have this range. After we printed new higher high, this is our range. So what does this lines mean? If price after this move gave us this kind of move, boom, okay, we would have change of character here, okay? So this would be change of character, but no, price did not break this line, so did not break this low. That's why we are still continuing trend. So we are still in bullish move. We printed new higher high here. This is our lowest point. Why? In this range, where is our lowest point? Here. So we have this range. Again, we have correction move, correction, impulse. So this is our lowest point. So in this range, where is our lowest point? Let's mark just like this. Sorry. So in this zone, where is our lowest point? Here, correct. So this is our new range. Again, we broke this structure. So we had this correction, impulse. This is our range. Again, let's delete this to make it clear. We had our, let's copy, higher low. This one is called higher low. What is one called? Correct, higher high. Let's mark higher high. And where is our highest point? Here. So this is our high. Okay, this is our high. So what happened here? We know we had this range here. Okay, this was our range. And after this break of structure, okay, we had, where is our lowest point in this range? This range, this one, correct. So this is our lower low. Okay, sorry, lower high, higher low. This is our higher low. So we know when we have series of higher highs and higher lows, we are in bullish. But when we break higher low or lower low, we have change of character, shift in the market. So finally, this range was broken. So this range broken is called change of character, shift in the market. This is not break of structure. This is break of structure, but it means change of character because we were bullish, as you can see. So price was moving just like this, boom, boom, boom. Okay, okay, like we were bullish. Okay, and after this move, we moved to bearish downtrend. Okay, so this is the point where market changed its direction. So this one is called change of character. Okay, after this low was broken, where is our highest point? Here. Okay, so this one is called as lower high. Correct. What is this one called? If this one is lower high, this one is correct, lower low. Again, where is our breakout structure? This is fake move, guys. Okay, I will teach you. Look, it broke this range, but this one is fake. Why? Because it broke with wick, not the candle. So this one is body, cold body. Okay, this one, and this line, skinny line, this one, okay, is called wick. When price breaks the range by wick, it's fake. But if it breaks with body, then it's real. So if we had uh, this type of break with body, okay, then we will have change of character again. But no, it was just weak. So this one is our lower high. Again, where is our lower high? Here. Okay, what this one is called? Correct, lower low. And market is moving bearish. Okay, again, where is our lower high? This point. Why? Because this one is, let's copy this. So this one is our lower high because this is our highest point in this range, in this breakout structure. Okay, boom, this is our lower high. Again, we broke this structure, so we have this range. Okay, let's mark this range so you don't. Again, where is our highest point? Correct, here. So we have this range, and this one is called as lower high. Where is our lower low? Correct, here. Okay, also in here. So what happened? After we had breakout structure, let's delete these types of lines. So we had this lowest point as here, okay? So this is our low, okay? Let's mark low. So this one is our low. And where is highest point in this breakout structure? In this breakout structure. Here, okay? This is our range. As we can see, we broke with wick, but this one is not valid. Why? Because it did not break with body. Okay, so where is our lower high? Here, okay? This is our lower high because it's not higher high. Why? Because it did not close with body. But after this impulsive move, as you can see here, finally we broke this range. We broke this range, okay? So this is our change of character. Why? Because we were bearish. We were bearish, and after this move, we have shift in market. So we changed trends from bearish, from downtrend to bullish and uptrend. So this was our range. So this is change of character. Okay, where is the lowest point here? From this to here, lowest point is here. So this is our low. Again, we broke this breakout structure. Look, this one is not valid. This one is valid because it broke with candle. Okay, candle body, not wick. So where is our lowest point in this range? Correct, here. So this one is called as lower high. Why? Because we are in bullish, we have uptrend, and in bullish we know that we have series of higher highs and higher lows. So this is higher low. So we have series of higher lows and higher highs. Okay, and why this one is called higher low? Because this low is higher than this low. Easy. It's easy, guys. I recommend you to watch this video 2 times, 3 times if you don't understand, okay? At first I was just like this, like I couldn't understand what does like someone is talking about me, like what does even high low means, or bearish or bullish, okay? Write down notes from my presentation, learn new things, practicing the charts every day, like please work hard and practice more and more every day. If you skip one day, you will forget. I promise you. So, trading doesn't like lazy people. Always keep working hard, trust the process, and writing down the notes is the most important. Like when I started learning trading, like in 3 years ago, I had 4 notebooks full of trading terms, strategies, blah blah blah. Okay, notes full of 4 notebooks. So please write down and learn and practice on the charts daily, daily. Okay, 1 hour, maybe 2 hours. Okay, so I would recommend you to go on the charts and practice where is your higher low and higher highs. Okay, you can DM me on my Instagram, or you can even uh, text me on Discord chat, and I will answer you if your markups are correct, please. Okay, let's continue. So This is our range, new range, okay? So we have this range. This range was not broken, so we are still moving bullish. Boom. What? So let's mark this. So what this point, swing point, is referred as higher high, correct? What this point is referred also higher high, correct? Why? Because this high, this swing point is higher than this high. Okay, so this is real move. Boom. And again, where is our lowest point in this box? From this to this, correct? Like in this range. Let's mark up just like this, so it will be easier. So I will delay this one. For you guys, it's easy, I think. So this is our swing point, okay? Where our swing point is. And this is when we broke this structure. So this candle. Where is our lowest point here? Here, correct. What is, like, this is lower low or higher low? Correct. Higher low. Why? Because this low is higher than this previous higher low. Correct. I hope you understand. So let's go to the lines. It's more easier for you guys, I think. Let's go here. Boom. Let's start from here again. Look, we have this change of character here. We talk about this, okay? So we were bearish, price was moving bearish in bearish, and boom, we had shift in the market. We had change of character. So this point was broken. So after this lower high got broken, we have change of character. So series of higher highs and higher lows. So what happened? We had this impulse saying correction, 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 impulse, correction, correction, impulse. You can see like it's easier. In this range, where is our lowest point? Here, correct. Look, this is lowest point. So this one is higher low. Again, let's mark where is our lowest point in this range. Here, so this is our higher low. You can mark up just like this, but I would say that practicing candlestick, okay, on candles, it's more easier. Like when you are just like professional or know how to read structures, you can mark up just like this, but in candlestick patterns it's more easier. Okay, I would recommend markups on candlestick patterns. Okay, what happened after this move? We had this impulse, so this one is correction, this one is impulse. Okay, so this is our break of structure. Again, we had this correction, boom, impulse. So this is correction, this is impulse. Where is our lowest point here? Here. So this is our higher low, because this low is higher than this previous low. And we have this break of structure because price broke this range. Okay, so where is our change of character? Let's go to change of characters real quick. Okay, so price was moving bullish. Okay, so we had series of higher highs and higher lows. After this break, where is our lowest point? Here. Okay, so this is our higher low. But what happened? We broke this higher low. So we did not print higher low. Price did not move just like this. Okay, price moved like this. So we have change of character because we were in uptrend in bullish and we went to downtrend bearish. So this break is called change of character. Okay, and boom, we started printing lower highs and lower lows, lower highs and lower lows. So this is our impulse correction, impulse correction, impulse correction, impulse correction, impulse. So we are printing lower lows, lower highs. Let's do one example. So in this break, where is our highest point? When we are in bearish in downtrend, we should look for higher points. When we are in bullish, we should look for lower points to identify lows, like lower highs or lower lows. So this one is highest point. So this one is called lower high. Why? Because this high is lower than this high. Okay, easy. So boom, this is our swing point. We had correction impulse. This impulse broke this lower low because it printed new lower low. So this one is breakout structure. I hope you understand this video and learn about market structure and how to identify bearish moves, bullish moves, so downtrends, uptrends, sideways moves, and also how to identify breakout structure both and change of character church. Okay, so I will show you also how I have my boss. So this is my breakout structure. You can mark up with this line, okay, and type breakout structure text, like go to settings and text markup both, okay, and I would recommend in late center, okay, and also in not bottom, middle, okay. So this is our change of character, sorry, breakout structure. And in change of character, here is my change of character. Look, just basically line and go to text and write change of character, or you can mark also as this one, okay. I think this one is more sexier, I think. So I would also remark just like I like this one. So let's mark where is our change of character. So this one is our change of character line, and this one our breakout structure line, okay. I hope you understand. If you have any questions, you can DM me, but I would recommend to rewatch this video again and write down notes. Thanks, future professional traders. Not just now, you will be very quick. Just trust the process and learn always. Write down notes and practice more. Like for example, if you have only education and you don't have experience. Like for example, let's say you know the rules of car, okay? So where is stop sign or where is like parking sign, okay? But you don't know how to drive. You cannot drive the car, yes? So you should know, you should have experience. What I'm saying. When you know, like when you have experience and you don't have enough knowledge, you can still drive the car, okay? So education is not as important as experience is. So that's why you should practice and practice more. It's same with trading. Like if you have education and if you know how to identify like breakout structures on change of characters, nice. But if you don't know how to do in this like live trading in live charts in live market, you cannot trade and you won't be successful trader. So I would recommend practice and practice more. See you guys on the next sessions and next chapters.